Welcome to the Swing Trading with Cycles channel. We're going to do an update on natural gas today, and my goodness, on a rare occasion to talk about bullish natural gas in the last few months. But we talked about this in the last update. If you're new to the channel, definitely take a look at the pinned comment, get yourself up to speed. Some great videos on price action, understanding cycles, and the previous video just so that you get up to speed. But we talked about the bullish case would be to make a bullish outside candle, because we made I'm just getting rid of these lines, excuse me. So I'll zoom in here on the weekly chart. Look at this candle. Ooh, my. These are the natural gas Henry Hub futures. So again, we talked about this idea that if we could get above here, that's 2.623, this would become a bullish outside candle. And we're here at 2.527. So it's been a big move this week, obviously. Would be incredibly bullish if it could close the week above there. Let's see if we get there. We haven't started trading in the regular day. It's earlier in the morning. So we have a lot of trading to go. But man, look at this candle. And that would potentially be on week 16. So you could call it like these have been two little short cycles. This was a short cycle, 7-week rally, and 9-week decline. 4-week rally, yeesh, 12-week decline. And if we, just to kind of get a little preview, right, let's look at this is a 2-week candle. So ignore the numbers because now these are 2-week candles, so every candle is 2 weeks. But think about what's happened here. This is a 2-week period where we were red, another 2-week period red, another 2-week period red. And this is like something like in between think of it as like a half-month candle. So it gives us a little bit of a preview into the March candle, how that might shape up. Look at this thing. So first off, this candle closes today. So once we close today, we'll have we'll basically be opening a new 2-week candle next week. And look at the setup here. This is really nice. That's what we're setting up for, folks. For the next 2-week candle to look like that, which would imply a bullish March candle, because obviously part of this candle is going to be March. I hope you're following. And most importantly, this 2-week candle goes green above 2.58. So we're like pretty close. What is that? Like 50 ticks away, right? So we would end up with a green bullish 2-week candle, hammer candle. Now, a candle is only bullish if you actually get follow through, so we'll see if we get that follow through next week. We could also see a situation where we get a rally next week and then a big pullback. So this next 2-week candle ends up having a upper wick, something like this candle here, for instance. But you can see just in the context of this downtrend, it makes sense that we would need a lower high at some point, right? Because this thing came down like that, made a higher low. Little high. This is a little higher low as well. You can see that, right? But then, really, it's also part of this big move down. So this has just been a huge trend leg down. So it stands to reason, even if we are going to go significantly lower, let's say we're going to take a trip back down below $2, which is entirely possible, we would still need to bounce a little bit, right? We could bounce all the way up there and then make another, and then find ourselves below there, for instance. Either way, one can make a lot of good money on this move here. And if you understand price action, you're vigilant. You don't get caught up in this move down here. So to be clear, you would sell somewhere around here. We have a swing high here. We're probably going to new lows. I'll get out. Worst case scenario, you get caught in a false breakdown. It reverses and goes back higher, but you can get back in. Again, if you understand the price action, you can mitigate some of the emotion. And most importantly, just to be clear, if we do get this kind of follow through, that'll make this 2-week candle a swing low, which means it puts us closer to having a monthly swing low. So let's look at the monthly chart. So we haven't gone green yet, and that's the other thing that would be a big signal. We still have a few days to trade into next week. This monthly candle, I keep saying, it opens at 2.73. So if we can get above 2.73 before the month ends, this thing will be a green monthly candle. Either way, whether it goes green or not, it's still a hammer. That's important to understand. every green hammer was a red hammer first. You can't be a green hammer without having been a red hammer first. That's such an important thing to take a step back and think about. So when you see a green hammer, it might be something that was and or is on the way to becoming a green one, more or less. And that's why that 2-week candle is so powerful. It's like looking inside this candle, like dissecting it a little bit. Like you're looking at something in between a week and a month. So a nice little hint. And if we look at the daily chart, now we're getting something that's more recognizable as a daily cycle low. So we talked about that. This could be day 40 of a daily cycle, and this could be a really bearish daily cycle where we just topped out, poked above the 10-day moving average, and just like kind of rolled over. Now it's looking more likely that this is actually day 50. So this would be day, I think that's day 50. So let's see, day 52. So your scenario here would be that this is day 52 instead. I know there are a lot of lines here. I think these are from lower time frames. Yeah, that's annoying. So this could be day 2 of a new daily cycle is what that would mean. Now we had a gap up opening, and at one point it looked like we were going to fill that gap, and we'll zoom into a lower time frame. We didn't do that yet. Like we didn't quite get to the gap fill. And you can see this is a gap opening above the 10-day moving average, which is this thing here. So we didn't quite close above it yesterday. And so you're getting all the signals you would expect from a daily cycle low. If we do look into the lower time frames, this is what candle is this? These are 5-minute candles. Let's look at the hourly. Go to auto. So you can see this is your gap up. And so it looked like it was spilling over, right? Like below that line. Like you're like, okay, if you break below that, it's over. And we did that, but then what happened? Boom, false breakdown. So if we looked at this on like an 8-hour level, ooh, it's a bullish outside candle. So that's the multiple time frame analysis. I hope that makes sense. And 4-hour level, you can see it too. We dipped down below this low, below these lows really, and then boom, rocketed back up. So the stop levels are pretty clear on natural gas itself. But let's look at oil. Again, market hasn't opened, so this thing hasn't started trading. But we can see what the implied open is. And so again, we talked about in that previous video, we got a swing low. Not a great looking one because of this wick, but we did get follow through yesterday, so that was good. And now we're getting more follow through today. So this candle is indicated to open at 576. Let's look at that. Let's look at what that means in the context of the weekly chart. And so for the weekly chart, this high here is 664. So that's interesting. Natural gas it looks like it could turn into a bullish outside candle on the weekly. If oil were to do that, even from this open price here, it would still have to make quite a move. So that's actually pretty encouraging. That means that there's a good amount of upside left even after this gap up opening that we would expect. And maybe let's look at it on a lower time frame, like the hourly. Let's zoom in on that real quick. Right, so this is where we closed, and it's saying that we're going to open up like around here. Right, so you can see on this lower time frame, higher low, series of higher lows, and this is just going to, and this was your sort of latest one. And so pretty clear, you probably don't want to get below $5. We're up here at 574. That's obviously, that risk reward is not great. And so I wouldn't be surprised to get a pullback, maybe a gap fill. So I don't know. I be careful chasing this for sure. UNG, let's see, same kind of idea here. Really, actually, pretty much identical pattern. If we look at the weekly chart situation, so for UNG, that bullish outside candle comes into play at 890, and we're indicated to open at 830. So another 60 cents. So what is that? That is, so that's actually another 7% up that it would have to rally today to close as a bullish outside candle again to get above this high here. We'll see. I mean, that's not a crazy rally for something like UNG. But again, we are already opening, like having a gap open. So that's asking price to do a lot more work. We're going to have to see how close we get. So that's the lay of the land. That's the update for natural gas. we're finally getting some recognizably bullish action, though to be fair, we have a lot of trading to go in the day, so a lot can happen. So we'll see how we close, and I'll definitely be putting out updates on Twitter at the very least, so make sure you're following there. But thanks for watching.